It is time once again for the weekly closes on our favorite Bitcoin miners. Let's get right into these charts. Let's start with CleanSpark here. You can see for the week, CleanSpark is up 34%. That is an amazing run out of CleanSpark after such a long time of being down. We've been falling down honestly since mid-July here, so finally getting this nice big up move is fantastic. Coming right off of these little tweezers here the last 2 weeks, those were sort of giving us the indication that we were ready and primed to go up. I didn't necessarily expect a 34% pop, but you know what, I'm happy to have it. So we're over the 21-week moving average right now, which is at 12.29. We went right above that. As long as we're holding above that 12.29, we've got room all the way up to $15. So don't be surprised if you see us up at 15 by the end of the month, potentially, or even the first week or so of November. Do watch out for the election coming up that first week of November. There could be some volatility the last week of October or the same week of the election. We also have that same week, we've got the FOMC meeting where they're going to announce the next rate cut, or at least we hope they're going to announce the next rate cut. So that was also coming up, and that will also have an effect on CleanSpark here. So we're not necessarily out of the woods yet, but this is a fantastic, fantastic start to getting through October and going into the Q4 Christmas rally through November. So that's what we're hoping for. We're going to see this thing. I'm pretty sure, I'm feeling pretty confident we're going to see this thing hit the 15, come right back up to like the 18. And in terms of like the full Christmas rally expectations, if things go as well as they have in the past, like we've seen, Novembers and Decembers that each have like 30-40%, so that would be like something like a 60 to 80%. If we see a 60, we'd be up at 20. If we see 80, we would be up around, let's go up here, we'd be up around $23 again. So I do think that we could hit 23 again before the end of the year. There is potential there for that. Of course, we'll be monitoring for it, and things will change. If things change, then we'll mention that. We'll talk about how they have been changing and how it may or may not look like it's going to reach that or not. If things get really out of control, I wouldn't be surprised to see it touch the upper fib cloud here, which is currently sitting up at about 26, 23. And that lower end of the upper fib cloud goes all the way up to almost $30. So, I mean, that is also a possibility. But of course, we're going to take this one step at a time. We're going to look at the monthlies, we're going to look at the weeklies as we move forward, and we're going to talk about where this thing could be going or where it is or is not going once we start seeing confirmation of that. But right now, the first step of confirmation, we're above the 21-week moving average at 12.29. That is fantastic. We're back above the 200-day simple moving average, which is all the way back down at 1080. So that's also really good right now for us. We're looking fantastic on CleanSpark. This is very, very good news. Very, very good week here. So pat yourselves on the back if you made it through all the harsh times, and be happy about this weekly move. Take a look at Digital. Digital for the week was up 28%. We're crushing that 384 level. This is good. Let me lock that down so I don't accidentally move it again. This is really good. So we're above the 21-day moving average. We're above the 5-day. We're heading towards the top of the ATR band. Top of the ATR band is at 477 right now. Now, when we hit that, we might find ourselves slowing down a little bit, but we have in the past, you can see back here, in June 2023 as well as December 2023, we did go outside of it. So we're coming up in that seasonality where we could find ourselves getting outside of the top ATR band. I think in this case, we will likely come up and touch the 200-week moving average, which is currently up at about 501. So this 520 line, I don't know if we're going to catch that again, but 501, I do think we're going to hit probably $5 on Bit Digital unless something catastrophic happens or they come out and they announce that they've done something to dramatically change the business recently. We are breaking out from this ascending trend line here at the bottom. We didn't come back to test it, so we did a much higher low, and now we're doing a higher high here from these previous two. So as long as we stay above 385, we got room all the way up to $5. Okay, all the way up to $5. If things really get on a heater, we might see this thing come up to even potentially come up to tap this line back here, which would be up at about $6 or a little over $6 for Bit Digital. So that's what I'm watching on Bit Digital for this season. I'm looking for it to come at least up to about 550, maybe if we're lucky, tap 6. And the way that things are forming right now, as long as we start creating a base above 385, 384-ish, as long as we start making a base up there, that is looking more and more like a possibility. And of course, if things change, we'll talk about that. But for now, things are looking bullish. This is beautiful. We're above this like triple bottom basically that we're forming, and on this wedge pattern that we've got coming up here. So I like it. I like it a lot. of what I'm seeing on Bit Digital. As soon as we get above 437, yeah, we're really unlocking some upward potential here on this thing. So hopefully they keep bringing us the goods, and we can move forward with Bit Digital and continue to see it thrive. Let's talk about one that I actually sold last week. Bitfarms. So Bitfarms last week only did 11.35%, and that all came through yesterday on Friday. Now, I mean, yeah, there's a little bit of egg on my face there. I sold the day before when it was like at its lows, like 190 or something. Yeah, I got out about 190, 191, and it went up to 206 right after. So that sucks, but that's okay. It's part of the process. It's part of the game. Sometimes you win some, you lose some, you make bad choices occasionally, and sometimes it works out, sometimes it doesn't. It's not really a big deal. For me personally, you know, there were just too many reasons for me not to hold this in the short term. If those reasons disappear, if they turn around, if the things that I mentioned in that video shift, then I would absolutely be looking at Bitfarms again. I do believe they are a very efficient miner. They're very good at what they do. They have the capability of being one of the biggest, best miners around. But their management is embroiled in too much drama for me, so I've been stepping away from Bitfarms for now. And if they correct a lot of that stuff, then yeah, I'd be back in. The other issue was institutional buyers fleeing from Bitfarms. That's a problem. When institutional buyers are buying Riot up much, much faster than they're buying up Bitfarms, that's a problem. Meaning that these big banks think that they're going to get that Bitfarm exposure through Riot, so why invest in Bitfarms? And that's what they've been doing. I don't like that. They might even be facilitating Riot to do that takeover that they wanted initially. Now, of course, that's all completely conjecture. There's no grounds for that. That's simply a theory, and one that caused me to make my decision as thinking about that sort of thing. Okay. Anyways, moving on. So we've got to get over the 21-week moving average, which is currently up at 219. So we're not there yet. We're there on Bit Digital. We're there on CleanSpark. We're not there on Bitfarms. Bitfarms has to get above 219, and it really needs to do it soon. Otherwise, we're going to be held down into this descending channel right now. We're actually at the very top of this aggressive selling channel that we've been in for a while here, that we've been in honestly since June. So we're at the very top of that. If we turn around here, we could be coming as low as 164 to reach the mid level of that descending trend line, which would, you know, maybe we'd see a bounce there. Maybe we'd come to the mid level of this less aggressive selling channel, which is down at 153. If we really got aggressive, if something really fell out from the bottom, it'd be like 127. Now, do I think that's going to happen? Not really, because we are still being propped up by this yellow trend line here, this little dotted one. And that one would prop us up next week at around 176 if we were to fall. So I really wouldn't expect to see anything going under 176 here. And if it does, then I'd be very, very concerned about Bitfarms if that were to happen. So we do need to see it get above the 21-week moving average. It's been held under the 21-week moving average since August. So it came up, tested it once, failed, tested it twice, failed. Is the third time the charm? Usually it is. We'll see if that third tap is going to break the 21 and send this thing all the way up to about $3. That would be pretty great. I'd be very happy for everyone still holding Bitfarms if it were to go up to $3. Just to be clear, I'm not rooting for this thing to go down. I want to see it go up. I do. I did not sell it because I hate it or anything, or that I want to see it go down. That is not the case. I do want to see this thing succeed. I do want to see this thing go up. I held through a lot of other problems. It just seems that there were just too many constantly coming up, and it was getting kind of annoying. So I wanted to park my cash. Honestly, right now it's parked in cash, and then eventually find somewhere with less drama to put it for now. But that's Bitfarms. Bitfarms is not in the best position, but it is looking like it is primed to attack the 21-week moving average up at 219 one more time. And this time will be the third time since August, so there's a good chance it could break it this time and then come up to the 200 moving average, 200-week moving average up at 266. So watch for those things there on Bitfarms. All right, Mara. Let's take a look at Mara. How's Mara doing? Mara is up above the 21-week moving average. That is really good. We are filling out this inverted head and shoulders I've been talking about for such a long time here. If we come down here, shoulder, came up, made a little shoulder there, and now we're coming up above the neckline on that shoulder, which is right around where we currently are, around 1880, 1890. As soon as we get above that, we do have the 200-week moving average up at $20.08. But once we're over $20.08, this inverted head and shoulders can take us all the way back up to $26. Okay, all the way up to almost $26. So don't be surprised if you see this thing go right past the 200-week moving average and find itself at $26 in a heartbeat. So I'm watching that really, really close. I do want to get in on some calls on Mara when it breaches the 200-week moving average and sends itself flying up to that 26. I'd be looking for that real fast. Happen. Okay. So that's it for Mara, really. Nothing else really to report on. Let's take a look at Riot. How's Riot doing? Riot is finally waking up. Look at this sweet trend line right here. Right here. Look at that trend line. It is just holding that trend line nicely. If it breaks that, it'd be having a bad time. But look at that. It was going up, and then just hit the boosters and accelerated. It was up 17.24% last week. That's the most it's been up in a really long time, showing that those institutions are coming back to Riot. They're coming back to Riot and not to Bitfarms, and that's a problem for Bitfarms, but it is benefiting Riot. I don't really know why they're coming back to Riot right now. Riot really hasn't sorted out any of its really big problems, but institutions are getting back behind Riot, and you can clearly see that in their move right now with a 17% up move in a week when they've been basically dormant for months and months. So Riot is finally showing some life. Riot is finally looking like it's going to make some nice big moves. Now, it's above the 21-week moving average at 889. As long as we stay above that, this remains bullish. Okay, as long as we stay above that, that remains bullish. And this aggressive trend line, man, that thing is nuts. If we hold that, oh boy, that's going to be good. That's going to be really good for Riot. We hold that trend line, it stays that aggressive. We stay above the 21-day moving average. We're breaking out of this descending channel here. We're breaking out with force. We're coming up to the middle of this much larger descending channel, though. We're coming up right on the middle of that, and notice this is technicals are so good. Learn how to do technicals, because look at this. We came right up to the middle of it. Now it was off by a few cents. It was off by what, 10.08. It went as high as 9.98, so it was off by 10 cents. By a mere 10 cents, this midline was off before it rejected and started coming back down. Technicals are important. We do need to get above that. So this could be an area where we find ourselves rejected, coming back down to the 21-week moving average down there around 889. We could find ourselves doing that. But we conquer this center line for this big downward channel here. We conquer that. We've got room all the way back up to the top of these big candles over here, up to like 11, 12, potentially even up to nearly $13 on Riot. So keep your eyes there. Watch that. Be cautious of all of those things in terms of the midline of the 21 moving average of this trend line. Watch those things carefully and act accordingly. And of course, none of this is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. And I'm going to take a quick station break. If you're still with us, smash that like button, subscribe if you've been with us a while and haven't done so yet. Don't forget to check out the Trade Cave store, link in the description, as well as the channel bio. We've got some excellent products on there. Also, the sticker shop. Do not sleep on the sticker shop. We actually have some nice affordable stickers now over on Redbubble. That link is also in the description and the channel bio. Let's get back to it. All right, let's move on to Iren. Ooh, I like this. I like this a lot. This is the goods. This is the goods right here. Okay, Iren's up 22.6% this week. That is beautiful. Okay, we can get rid of this line here. That we don't need that line anymore. This line right here is good. We're above that 875 line. This one also broke through and above the 21-week moving average at 843 right now. This week currently sitting at 949. We're breaking out of this wedge pattern here, right here, like this pennant. We're breaking out of this pennant to the upside. That is beautiful. We are breaking above this inverted head and shoulders. I'll draw it for you right there, like there, right there. The neckline, which was at around $9 or so, we are breaking above that. We hold above that. If we hold above that, we've got room all the way up to about $13 on Iren. Okay, we got room all the way up there. There's not really much in our way right now. Not really much at all. Let's see if we got, none of the fib clouds. And the ATR band on the weekly is all the way up at $13. So we could hit that. And we've gone above this thing multiple times. We've gone above that top ATR band once, twice, 3 times just in the last year and a half or so. 1, 2, 3. Let's see if there's another one. Yeah, 3 times in the last year and a half we've gone above that at key times. In July, in December, and then again in June and July. So where are we coming up on right now? December. Where are we going? We're headed above this ATR band. How far above this ATR band? Let's take a look. Let's take a look. When was the last? How high above it was it in Christmas? So ATR band was about right there, and it went about, see right here, it went about 22% above it. So if we went 22% above the ATR band this Christmas, just like it did last Christmas, where would we be sitting? 22% above the ATR band, 2181 is good, $16. Take us right back to the high. we could potentially see this thing hitting about $16 around Christmas time or a little after Christmas time. So this is, if you haven't been accumulating this, this is still in an accumulation zone, or it's just above the accumulation zone. The accumulation zone was honestly $6 to about $9, so $6 to $9. That $3 window there was the accumulation zone. We are slightly outside of it, but it is still in a near an accumulation zone. So like it's not over yet in that relation. And I do think that this thing's going to hit the top ATR band probably around Christmas time, maybe even higher than that, as it has done so in the past, repeatedly gone above the top ATR band. So I would not be surprised to see this thing trading at $16 around Christmas time. And I would absolutely be churning it, selling it off, because most of my shares are about $7. I'd be selling it around 16, waiting for it to come down in like March or February or March, looking for that sell-off, and then looking to reload and re-up for that June-July rally again next year. That's just my personal plan. Of course, none of this is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. Okay, let's move on to Corz. Corz was weaker. So this week it was down 3.1%. Now, again, remember, this one's weaker, and we know why this one is weaker. It's coming to the top of a bearish technical pattern, right? It's been running really hot for a really long time. It is up how many hundreds of percent since just April? It is since just April. Let's go from the bottom to the top. It is up 377%. If you're not taking profits on 377% that you earned in just a couple of months, you are insane. So that is what's going on here. Profits are being taken. Profits are being taken because profits have been earned, and 377% is an amazing run. So if you're not taking profits around that time, I would say that over 300% you're not taking profits. That is greed, and that is dangerous, and you're probably going to lose your bag. So of course, that is not financial advice or a suggestion to buy, sell, hold any asset whatsoever. Just my opinion. So we're looking at this thing to come down potentially. Okay, it needs to likely come back down to at least the 5-day moving average, which is currently down at 1236. It might come to the bottom of this ascending triangle here, which would be next week, right at the 5. If we lose that, we're coming to the 21-week moving average, which, well, maybe not first. We'll come to 1087 and we'll see if that breaks. If that holds, then we're not going to the 21-day moving average. If that doesn't hold, then we are going to it, which is going to be down around $10 on Corz. So don't feel despair yet. It's not like going to crash or anything. It ran before the others and now it's cooling off. That's all that's going on with Corz. Nothing too much to be concerned about. There's just some profit taking. It might dip decently hard, like we saw, just like back here, right? Just like back here, we had this ascending triangle and it broke to the downside and it came back to the level of support. If we didn't have that August 5th shakeout that we did, it probably would have stopped around 8, maybe 850 or so before turning right back around and going back up again. Notice it never went back below this 830 level after that shakeout. So that's basically what we're looking at here. And in this case, the 1087 would be that level I'd be watching to see if it's going to hold. And that would be the area that I'd say would be like that natural area where it would start to turn back around again if it came out of this ascending triangle here. Let's take a look at Wulf. How's Wulf doing this week? All right, Wulf is just charging up on the week. This thing is beautiful. It's just holding the 21-day moving average over and over and over again. The thing will not break. The 21-day or 21-week moving average is all the way down at 413. We're up at 524. I told you we're trading above $5. Trading above $5 opens up to $6 or $7 on Wulf. Wulf is going to keep charging up. Unless something changes, Wulf is charging up. And that's it. As long as it holds above $5 or that 496, as long as it holds above that 496 level and we don't find ourselves trading below this red trend line here again, as long as those two things don't happen, we are going. And you can see here we've got a higher high, higher low pattern. So we had this low right here, right? Then we got this high right here. Then we got a higher low there in September. And then in late September, we got a higher high. And then we got a higher low in October. And right now, we're not quite at a higher high yet. So next week, we might find ourselves getting a higher high. We need to take out. Let's see, what do we need to take out? Let me get rid of this drawing so I can see it. We need to get above 543 to continue on with this higher high, higher low pattern. And if we continue on with this higher high, higher low pattern, I would not at all be surprised to see Wulf revisit the highs around 650, maybe even going up to $7. Now, if it fails to do a higher high, right? If it fails in the next 2 weeks or so to do a higher high, then the pattern is going to get a little more dicey and we'll have to reevaluate from there. So it does need to get at least wick up above 545 in the next week or two in order to maintain this bullishness. But again, this is also an inverted head and shoulders. We got right there, shoulder, head, shoulder, and this inverted head and shoulders could take us all the way up to the 200-week moving average, which is all the way up at $7.12 on Wulf. So Wulf is looking very, very bullish right now. As long as it holds above that 21-day moving average, we're still in a bullish pattern. As long as it crushes that 545 and at least makes a wick above that, we're still making higher high, higher low patterns. So Wulf is looking great. Let's take a look at Hut. How's Hut? Yesterday it was up 14%. For the week it was up 23%. It is doing that inverted head and shoulders. This is looking just like Mara, exactly like Mara. And I would not be surprised to see Hut coming up to that 200-week moving average around almost $18, $19 very, very quickly. That's what I've got. All I got to really say about Hut. Let's look at Cifr. Cifr, same thing. Cifr is breaking out. We were talking about this for the last like 2.5 weeks or so. That Cifr is looking ready to break out. That is doing that inverted head and shoulders right there, right? And the inverted head and shoulders is going to take it back to the top of this channel that I've got here, right here, this green line up here, which is currently up at about 626. Cifr is finally out of this downtrend. Finally out of this downtrend that it's been in since July, when all that FUD came out, when the that news that turned out to not be true, I guess, about them being open for sale. After all that has finally flushed out, we got that inverted head and shoulders, and it is breaking out. Is it too late to get on Cifr? I don't think so. I don't think it is too late to get on Cifr. I think we might see it pull back a little bit, maybe come to like 450, 460. Possibly if we're really having a bad week, coming back down to like 440-ish. But I don't really see it returning to the lows. I don't see it returning to the lows. I see it getting back into this channel right here. I'll draw it. I see it potentially getting back into like this channel right. Oh yeah, it already is. This channel like right here. And coming up to potentially at least the midline of this thing around 572, maybe even the top up around $7 for Christmas, because it has in the past, just like with Iren and some of the others, Cifr does break out above the top ATR band frequently since January 2023. It's done it once, twice, 3 times, 4 times, 5 times, no, 4 times, 5 times. So it's done it 5 times. Each time it was, let's see, it was January. Then it was in April. It did it again in July. It did it around Christmas. It did it in March, and it did it again in July. So what are we coming up on right now? Christmas. What can that see for us? That could see this thing coming up above the top ATR band, which is currently at 628. How much higher did it go in July? It went 15% above the ATR band in July. What would that take us to right now? 15% above the ATR band right now would take us up to $7.31 on Cifr. So that is actually a possibility right now. Okay, so keep that in mind. Watching Cifr, it's looking really, really good right now. Okay, let's take a look at Hive real quick. I don't normally cover Hive, but it is doing something technical right now that is important. Okay, Hive went up 20.95% last week. It is breaking out of this pennant right here. So I drew this pennant either last week or the week before. It broke out of this pennant. That is beautiful. That is really good. Now, what's in front of it? In front of it, we've got this descending trend line that it's been respecting since July of 2023. So a little over a year, almost a year and a half. It is going to encounter some resistance there, which is at about $4. Okay, it's going to encounter some resistance there. If it conquers that, then we're open up to the top ATR band. That top ATR band up there around 465. Okay, if we find that thing start to curl up and get higher and higher and higher, then we've got to contend with this much larger descending trend line over here that's been going on since August 2022. And that one is going to be, by the time we get there, let's say it's around Christmas, that one is going to be up at 558. That is going to have to get up and above in order to even have a chance at running for the 200-week moving average, which is up at 715. So there's kind of a lot of resistance in the way of this thing, but it is technically breaking out right now. It is doing a technical breakout right now, looking very similar to CleanSpark having these 2 tweezers and this massive breakout. As long as we hold above 350, I think that Hive is going to, at minimum, touch this descending dotted yellow line I've got here, which would be about $4, and probably going to break through that. Honestly, I think there's a good chance it could potentially break through that. It's got the momentum to do it. It could break through it, and then we'd be looking at the top ATR band around 450, and that's where I'll come back to talk about what it is doing and what it's looking like in terms of strength and if it can conquer it or not. Okay, last one, Slnh. The lotto play. The lotto play is breaking out. I'm actually up like 35% on this since I went in on it. I'm very, very, very happy about this. This thing is great right now. Last week we were up 25.6%. As long as we're holding above the 21-week moving average, which we just got above at 390. As long as we're holding that, we have room up to the top ATR band, which is currently at $7. We are breaking out of the consolidation zone. We could do something like a cup and handle here. You see it coming through like going like this, right? And we could create a little handle, and that would take us all the way up to about $7 here. That would be beautiful to see if we had just like 2 weeks of a handle and then launch. That'd be beautiful, 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 beautiful. Kind of like maybe these, something similar to like those 3 candles we got in August through 15th through 19th there. Not 15th through 19th, through, yeah, August 5th through 19th, something like that, but to the downside for a little bit, like, or smaller, a little smaller preferably. We get something like that. Ooh, boy, man, this thing is going to launch up. It's going to look for the highs around $7 again. Then that's going to be really, really, really nice, especially since, it's just a little moon bag. I've got just a couple hundred of these things because I don't have any conviction in it whatsoever. But it is a fun lotto play that I've been enjoying for now. Anyways, that's all I've got for you today. Please like, comment, subscribe. Check out the Trade Cave store, link in the description as well as the channel bio, and have a profitable day.